work for years for this ain't no coincidence. Back then when I weren't so lit, now I'm lit, they're pissed. Bad bees, they curved the kid back then when I weren't so lit. Now I'm lit, they're pissed. Told bro that you gotta take it slow, but he knows crime pay, so he won't go lit. Went 3 for 3, now 6 for 6. Put in the work for years for this ain't no coincidence. I did have to take them trips. Shit, they talking shit and it made me sick. I said fuck school and it made me rich. We did sell crack on the 80s ting. The jakes on us and they pray we slip. Said fuck school and I broke the law. Told little bro gotta stay in school. Telling the kids this shit ain't cool. Fuck, I'm so hypocritical. Fuck, I just missed the call. My bros in the field not bullying pools. So cocaine and molly and all. Told mum Z don't worry at all. Step in a bando, honey, I'm home. The local fiends don't vouch, you won't get served. The cat's unknown, I don't owe no, I made money alone. Bad bees, they curved the kid back then when I weren't so lit. Now I'm lit, they're pissed. Told bro that you gotta take it slow, but he knows crime pay, so he won't go lit. Went 3 for 3, now 6 for 6. Put in the work for years for this ain't no coincidence. I did have to take them trips. Could've been in the bin if it weren't for the gloves that I had when I rapped that Riz. That kid got nicked on an amateur ting, got banged that cling, take precaution. If you knew the risk we took to get paid, you wouldn't look at me the same. My bro got the wickedest aim. We're bringing the blicky on stage. They're hating, I'm really unfazed. Haha, don't test my patience. Half of the hood they show, man, love this play that the rest are hating. Now got gal all around. Still my one from the west, my favorite. These cats are domesticated. Jake's in the station investigating. Bad bees, they curved the kid back then when I weren't so lit. Now I'm lit, they're pissed. Told bro that you gotta take it slow, but he knows crime pay, so he won't go lit. Went 3 for 3, now 6 for 6. Put in the work for years for this ain't no coincidence. I did have to take them trips. Bad bees, they curved the kid back then when I weren't so lit. Now I'm lit, they're pissed. Told bro that you gotta take it slow, but he knows crime pay, so he won't go lit. Went 3 for 3, now 6 for 6. Put in the work for years for this ain't no coincidence. I did have to take them trips. Put in the work for years for this ain't no coincidence. Back then when I weren't so lit, now I'm lit, they're pissed. Bad bees, they curved the kid back then when I weren't so lit. Now I'm lit, they're pissed. Told bro that you gotta take it slow, but he knows crime pay, so he won't go lit. Went 3 for 3, now 6 for 6. Put in the work for years for this ain't no coincidence. I did have to take them trips. Shit, they talking shit and it made me sick. I said fuck school and it made me rich. We did sell crack on the 80s ting. The jakes on us and they pray we slip. Said fuck school and I broke the law. Told little bro gotta stay in school. Telling the kids this shit ain't cool. Fuck, I'm so hypocritical. Fuck, I just missed the call. My bros in the field not bullying pools. So cocaine and molly and all. Told mum Z don't worry at all. Step in a bando, honey, I'm home. The local fiends don't vouch, you won't get served. The cat's unknown, I don't owe no, I made money alone. Bad bees, they curved the kid back then when I weren't so lit. Now I'm lit, they're pissed. Told bro that you gotta take it slow, but he knows crime pay, so he won't go lit. Went 3 for 3, now 6 for 6. Put in the work for years for this ain't no coincidence. I did have to take them trips. Could've been in the bin if it weren't for the gloves that I had when I rapped that Riz. That kid got nicked on an amateur ting, got banged that cling, take precaution. If you knew the risk we took to get paid, you wouldn't look at me the same. My bro got the wickedest aim. We're bringing the blicky on stage. They're hating, I'm really unfazed. Haha, don't test my patience. Half of the hood they show, man, love this play that the rest are hating. Now got gal all around. Still my one from the west, my favorite. These cats are domesticated. Jake's in the station investigating. Bad bees, they curved the kid back then when I weren't so lit. Now I'm lit, they're pissed. Told bro that you gotta take it slow, but he knows crime pay, so he won't go lit. Went 3 for 3, now 6 for 6. Put in the work for years for this ain't no coincidence. I did have to take them trips. Bad bees, they curved the kid back then when I weren't so lit. Now I'm lit, they're pissed. Told bro that you gotta take it slow, but he knows crime pay, so he won't go lit. Went 3 for 3, now 6 for 6. Put in the work for years for this ain't no coincidence. I did have to take them trips.
Hello everyone, my name's Dean. Let's talk crypto. This is where you subscribe for daily Bitcoin updates and technical analysis. We track the price of Bitcoin as a proxy for the cryptocurrency markets at large. Today is March 20th, 2023. And the $30,000 level is not what most people think it is. Many people, many YouTube analysts, many market participants are saying that 30K is the biggest resistance. It's huge resistance. We're going to dispel that, okay? Just based off of the technicals. We're going to look at what the 30K region is really, what it represents for Bitcoin moving forward, because it's very likely that we test that area very soon. And we're also going to talk about the US dollar currency index, right? Everybody's talking about the banking collapses and what's going on, not just in the US, but also internationally with Credit Suisse and UBS and all this other stuff. Like, are we nearing a credit crunch, just economically? From a banking perspective, are we totally screwed? Okay, and what can we do about it as traders? How can we take advantage of this using this information in our trades? We're going to look at the DXY and how everything, absolutely everything that's happening right now was in the charts. Okay, I don't know why. I don't know how it happens that, you can see things in the charts like this, but we're going to show how all the stuff that's happening right now and everybody's sort of paying attention to the news and saying, oh, therefore, in that case, I'm going to invest in Bitcoin and cryptocurrency. All that stuff was in the charts. And this is why we've been in crypto. It's not by accident. It's not for nothing. We're also going to talk about the $1 million Bitcoin price target. Okay, I know this is a very popular, right, on social media right now. It's popular in the collective consciousness because of this one individual, the former CTO of Coinbase, Balaji, saying that Bitcoin is likely to hit 1 million within 90 days, and he has $1 million bet on that, okay? We're going to talk about why that may be underselling it a bit, and it has nothing to do with what he said necessarily, okay? That always ties in, but again, everything has been in the charts. If you're a subscriber to this channel, you know exactly my Bitcoin predictions for the next bull run, and you understand that way before Balaji was saying what he said, I was talking about Bitcoin in the millions. And so I'm gonna basically show how, despite people saying that that's completely crazy, it's completely nuts, it doesn't make any sense, it's way too moon boy, it's unrealistic, we're gonna show how those people don't know what they're talking about, because you can find an analog to that kind of growth in Bitcoin's history. Yes, Bitcoin has done that before, okay? So the people that are saying all of these things clearly don't know technical analysis, because if you look in the charts, when Bitcoin was at $3 and it went all the way to $60,000, what were people saying back then when it was at $3, right? Or if you were the type that said, oh, this is impossible, it can never happen, and you sold when Bitcoin hit $10, then you're kicking yourself, okay? This is the power of technical analysis. So again, everything on this channel comes back to the technicals. This is why we focus on the technicals. This is why I only talk about the technicals. Because even though those other things may be true, it may be very well be true that the dollar is being devalued and banks are going under, they're over leveraged, all that stuff. That's always been true, but we could see that in the charts. It may very well be true that this person is talking about Bitcoin to 1 million for X, Y, and Z reason, but I can give you technical reasons why Bitcoin should hit 2 to 4 million in the next bull run. Just technical reasons, okay? So both things can sort of coincide, be mutually sort of true, but, right, as traders, how do we trade information that's not on charts? It's more difficult. So that's the show today, basically. If that interests you, then watch until the very end. Let's start off with Bitcoin on the small time frames. Okay, So we're looking at Bitcoin on 15-minute time frame. And there's something I always say about weekend trading, okay? One sec, let me take a drink. By the way, I hope everybody's doing well. I hope everybody's happy and healthy and all that stuff. So, weekend trading. We ended the week last week right here, okay? The close of the market was here. Bitcoin never closes, you say. I understand that. But please, we acknowledge that Bitcoin doesn't move itself. It's not a bunch of people pumping billions of dollars into this asset that moves the price. No, that's not what moves the needle. On this channel, we've acknowledged with evidence, with factual evidence, that the US dollar is what moves Bitcoin. And it's not that the US dollar is being pumped into Bitcoin necessarily. It's the relative strength of the US dollar. If the US dollar is relatively strong or relatively weak, that is what fluctuates, modulates the price of Bitcoin, okay? And so given that the US dollar currency index, the index that measures the relative strength of the US dollar, closes on Friday Eastern Standard Time at around 5 to 5:30 p.m., we see that from that point on, you typically get what I call wash trading, or if you go down, you come back up to the point you stopped, okay? So it's not an accident, and you shouldn't be surprised that, lo and behold, from the last close of the DXY, we just did a bunch of this, okay? Now, this is absolutely, positively useful. I talked about that in my Saturday update. I give a small, quick Saturday update, and I said, best case scenario for the bullish case. Why? Because you're consolidating. You're consolidating or reaccumulating in a bullish trend, right? So basically, trend, reaccumulation, trend continues, okay? And that's exactly what we got here. However, functionally speaking, if you're trading it, understand that you're likely to experience like no what's the word I'm looking for? No material change in the price, right? Because it's a wash. So you go down, you come back up, you go down, you come back up, go down, and it's not an accident, it's not a coincidence that you end up in the same spot that you were on Friday. That's a key tip. If you are into trading crypto, Bitcoin, watch the weekends, watch Friday, and then watch Monday. Look where the price typically ends up. It usually is around the same price it ended on Friday. That's because of the liquidity being cut off. And that liquidity is the DXY's liquidity, which doesn't kick back in until late Sunday evening, early Monday morning. All right, so that's that. Now, given that analysis, let's look more closely at this, okay? And I'm seeing this as a consolidation reversal, a bullish consolidation reversal. Why am I seeing it that way? It's because if you look throughout the rest of the market, you see the same thing, except orthogonal, okay? So I'm going to show you just a few examples here. You see these consolidation reversals, but they're not like Bitcoin up and to the right. They're actually down and to the right a little bit, or more straight, okay? So that basically tells you that over the weekend, crypto was consolidating. Here's blurred down and to the right, okay? Over the weekend, crypto was consolidating, and that is good. Every time you consolidate in the middle of a trend, you should expect a continuation of the trend, okay? So this is basic technical analysis that we're looking at, that we're seeing, okay? So let's go back to Bitcoin. Whoops, I didn't want to do that. Let's go back to Bitcoin. Guys, if you're getting value, please like, share, and subscribe. All right. One sec. We've got a long list here. Let's go back to Bitcoin. Okay, so back to Bitcoin. Let's acknowledge that this is likely a consolidation reversal pattern. If so, what are we looking for? As always, given that, my area of expertise is Elliott wave theory, I'm going to look at it in terms of 2 degrees of AB basing and a pivot. If I were a Wyckoff trader, I would be looking at it in terms of a Wyckoff accumulation schematic. Doesn't really matter. Just find a tool, find a style of analysis, and try your best to master it. Actually, these areas of a consolidation are all that trading's about. Okay? I always say this on the channel for a reason. This stuff is what you want to master. Everybody can perceive the ups and the downs, right? The impulsive moves. But that's not going to help you because it's hard to trade those, and it's hard to know when those are coming. It's hard to time them exactly, right? What you want to do is perceive the consolidations, perceive the distributions, perceive the accumulations, right? Any consolidations, the sideways stuff, read it accurately, enter trades during those times, and then take advantage of the ensuing impulse. Okay, this is the precursor for an impulse. If it's an accumulation, it's a precursor for an impulse to the upside. If it's a distribution, it's a precursor for an impulse to the downside. In my estimation, in my opinion, based off of what I know at this point in time, the best traders are able to expertly read this to a high degree of probability, enter trades during this time, or exit trades during this time to take advantage of these coming moves. This is cause, this is effect. That's all Wyckoff trading is about, by the way. Wyckoff talked about cause and effect. I love how he puts it. I'm not a Wyckoff trader, but I love how he put it. Read the cause and enjoy the effect. Okay? That's simple. Okay? So I'm reading this as 2 degrees of AB basing. This is where I start. My A wave, my big A, let's just do this real quick. Big B. Okay? That's my initial break of structure. This is my small a. Here, let's label this. Big A, big B. Small a, small b. Okay? Second degree of AB basing. Now here's my pivot. 1, 2. And I should be done. 2 degrees of AB basing and a pivot. Okay? I loved it. It's hard to read. It's not always easy to discern, but it's consistent. So if you want to short Bitcoin, or long Bitcoin, you want to be able to try to make sense of what you see in those consolidation areas. So that's what I see. So that's Bitcoin on a short time frame. I am seeing that after we got, let's zoom out for a second. So I am seeing that after we got out here, so this is a 4-hourly time frame, after we got out to this area and retested this level, right? Remember, this was, here, let me put this in, because I don't know how many people remember my previous analysis. Here, let's zoom out even more. You had a 55-day resistance here, okay? And you see this. So this was 55 days worth of resistance that you broke right here in this candle, okay? And that happened on Friday. What happened after that was even more important. Again, it's not just about breaking the resistance or breaking the support. It's all about the retest. So after you broke it on Friday, you retested it on Saturday. I talked about that on my Saturday update. That retest was everything because the retest confirms the move is true. After that retest, you're free to continue, okay? And actually what you see is you've got in this consolidation reversal that we looked at on the smaller time frame, you've got a bit of a double retest. Okay, let's go back on the smaller time frames. You can see that here, okay? So just be mindful that this is 55 days worth of consolidation, or sorry, this is 55 days worth of resistance, broken to the upside, duly retested, okay? In this whole running consolidation, okay? It's a running consolidation. Why? Because it's not orthogonal, it's not straight. And that shows that there's a lot of buying pressure, so much buying pressure in Bitcoin that it can't stay straight. Okay? But if it were that there weren't an ungodly amount of buying pressure, you would have gotten multiple retests of this 55-day resistance turned into support. I'll give you an example. All right? Look at Ethereum. Okay? You can look at a lot of other assets doing exactly this, but look at Ethereum specifically. Ethereum also put in a similar move, retesting that 55-day resistance that it had just broken, right? It broke the resistance, retested it, retested it, retested it. So Ethereum's bullish, but it isn't as bullish as Bitcoin right now. It just isn't. And you can see that by this chart. Do you see what I'm saying? The break was one thing. The retest is a whole different animal. That is the confirmation of the veracity of that break. So people who think that we're going to fake out, quote unquote, or break below after this kind of retest don't know what they're talking about. It's highly unlikely, okay? Nothing's 100%, but it's highly unlikely, okay? Back to Bitcoin. So what we can see is we have a bullish move on our hands, all right? It's bullish because just basically you're breaking resistance, retesting it as support. And if you qualify the retest is particularly bullish because it is running. Running in terms of Elliott wave theory means up and to the right. It means there's so much buying pressure, like I said, it's no longer straight, okay? And we've read this as 2 degrees of AB basing in a pivot, so we do expect a move here. Now, given that analysis, let's zoom right back out and understand where we're at. I don't think people understand, especially people who are shorting or people who are still under the impression that we're going back under. And guys, you don't need any moving averages to make this qualification. But it's quite simple. For the past 300 days or so, we had been in this accumulation zone, okay? And this was clear resistance to the Bitcoin price. We just broke that. And again, it's not just breaking, but we retested this level. So this is no longer a thing. So people who think we're coming back down to 12K, 20K, like, again, I want you to understand that anything can happen, but whenever you're doing technical analysis, it's all probabilistic. And when you break high time frame resistances and retest them as support, it's very unlikely that you're going back down. So whether there's a CME gap or whatever you want down there, it's unlikely to get filled. Okay? Now, having conquered this level right here, we moved up. We saw that 55-day resistance was also broken and retested. You should technically, if you're just looking at basic support and resistance, look for higher. And that's exactly what we're doing. We're looking for higher because we're looking and seeing this move as being an intra-wave consolidation for a further impulse. Okay? Furthermore, if you're looking at the larger chart of Bitcoin, what do you see here? Not much. This is a low liquidity zone. There's no resistance up until you reach about 30K, okay? Then you have a bit of resistance. Now, that brings us to the topic of the live stream, one of the topics of the live stream, which is the 30K level. Everybody's saying, oh, this is an order block, this is a massive resistance. Like, honestly, that's not massive resistance. That was a historical consolidation that lasted all of, what? We're on the daily time frame. This is a month worth of consolidation. A month worth of consolidation isn't a massive resistance, right? You were breaking down and you consolidated for a month and then you broke down some more. Okay, if you get up to this area, are you going to just cruise right through it? Probably not. But are you just going to consolidate? Here. Are you going to do something like this? Most likely. Are you going to do something like, oh no, the biggest resistance in all of history, come back down? Highly unlikely. Highly unlikely. It's possible, but it's highly unlikely. Because again, this is relatively mild resistance. Just look at it. Just look at it, okay? And I want to just zoom back out a little more. Look at it. The 30K level that everybody's championing and saying that this is the biggest resistance in the world, and, you know, they're thinking of taking profit here. You literally have 30 days of resistance there, as evidenced by that right here. And let's zoom out even further and make sure that that's the only thing going on. And yes, that's the only thing going on, because prior to this entire move, the high was 20K, okay? So anything that you see in this region of our chart, that's all there is. That's all there ever has been. So literally, in Bitcoin's entire history, the 30K level literally has 30 days of resistance. That's it. So you got to think about it. Now, you get even higher, okay? Because we're talking about the 30K region. Some people say the 30K region, not necessarily 30K, but they're saying a little around 32K, say. You've got a little resistance around here, okay? Between 32 and 35K, and then a little more resistance around 38 to 46K. But what's important is that there's no one area where all the resistance is. Actually, this resistance can best be depicted by a rising channel, okay? This is the best depiction, just graphically, right, of the resistance that we're experiencing in what people call the 30K zone. And it's not at 30K. It's more at between, well, it's rising. So if Bitcoin hit it today, it would be at 46K. Okay, that's the idea. This is why I'm saying most people are going to take profits way too early, and Bitcoin's not going to give a damn about this 30-day sort of consolidation and just stop in its tracks. Just because that's what the charts are saying. Okay, so don't be surprised, again, if Bitcoin chops up and to the right while it's going through here and only decides to finally retrace significantly once it hits this level right here, the bottom of this uptrending channel. Okay, the 30K level is not what you think it is. It's not what it's advertised as being. Way too many analysts are doing this. All right, they're probably with the log off first and foremost. Okay, and when you have the log scale off, this looks a lot more like this. Okay, a lot of people don't know how to set up their charts. They got their log scale off and they're looking at 30K and saying, oh, do you see, there's so much going on in this region. But again, remember, you got to have your log scale on when you're talking about assets that move this logarithmically. When assets move this impulsively, you need to distinguish the price levels on a single chart. You need that log scale on. It's not optional. Okay, so this is why I'm saying the 30K level is not what you think it seems. Okay. Let's so that's Bitcoin. That's why I'm looking for more important resistance around the mid 40s, and it's likely to happen sooner than later. Why? Today is the 20th of March. Okay? The 22nd, we have the FOMC announcement. We typically get some sort of catalysts on those days. Okay, catalyst meaning it was in the charts, it was likely to happen, and then that announcement happens and it sets off whatever we saw was likely to happen in the charts, right? So that's the 22nd. That's in 2 days. What else is in 2 days or around 2 days? The new moon. Okay, and what do we know about the new moon is that the new moon typically represents in an asset, and this is based off of data, okay? 50 plus years of data on the S&P 500, or is it? I think it's the S&P 500. And basically, you're just looking at markets in general. Markets tend to top or reach a local top 0 to 3 days after a new moon. The new moon is the 21st. The 22nd is the meeting. So don't be surprised if on the 22nd we hit this level. Okay? That would represent a top. So that's my take on why. 1, the 30K level is not what you think it is. 2, we're likely to hit it sooner than you think. Okay? So that's Bitcoin. Now, let's segue to the US dollar. Okay? We're in the midst of what many would call a banking crisis. Okay? Where you have all of these banks going under because they were over leveraged. And now, because of inflation, their treasury bonds, I believe, are worth nothing. Or, they can't cash their bonds. They can't wait until their bonds mature. So their bonds are worth a lot less than they wanted them to. And then people are getting nervous and basically taking their money out of the banks. And the banks don't have enough money for people to do that. So we've seen this. Okay, I know this is happening now. I know this is a thing now. But the dollar has been weak for a long time. Okay, and what does it mean when we say the dollar is weak? When you talk about inflation and you say the dollar is weak, those two terms are synonymous. Okay, inflation is the devaluing or debasing of a currency. Okay, a fiat currency. When the DXY, the US dollar currency index, is going down, it's denoting that the US dollar is losing relative strength. When the US dollar loses relative strength, equities, bonds, I believe, assets, or not bonds, but equities and basically risk on assets appreciate in value just by definition, by virtue of the dollar losing strength, right? Because they're just more valuable because they're denominated in dollars, and they haven't lost their strength where the dollar has. So it takes more dollars to buy the same amount of Bitcoin, the same amount of stocks, the same amount of gold or silver. Do you see what I mean? But we could see that ever since, right? And if you read the charts, just like I was saying in the introduction, the charts told you everything. The charts told you that if you were in dollars and you had a lot of dollars in a bank account, it was a bad trade to leave them in, because from this high in September of 2022, it was very likely that the relative value of your bank account go down quite substantially, right? Why? Well, because this is the natural flow of things. So I don't know, guys, why this is and how it seems to be so consistent, but that's why we do technical analysis. It's really consistent and it's really amazing. Ever since 2011, right? So for 12 years, the dollar's just been going up and up and up and up in 5 waves, as Ralph Nelson Elliott explained, right? You go up impulsively in 5 waves, and now you come down in 3. So we expected to come down in 3, and it's very likely that we do something like this. So, are you incentivized to keep your money in dollars? I wouldn't. Why? Because remember, basic tenet of Elliott wave analysis is this: if you go up in 5 waves, right, especially for a first wave, right, that was 3,941 days. I don't know how many years that is, like 12, 13 years, something like that. you should expect to go down for the same amount of time, more or less, for that wave 2. Okay, but you're not going down 100%. You're going down maximum 68.1%, right? You're going, 61.8%. You're going down to the golden mean. So basically what I'm trying to say is this. I'm bearish on the dollar for the next 12 or so years because we've been in a rally in the dollar since 2011. And so as a result, given that this is likely finished, I'm expecting for us to come down in a similar way that we went up, right? We went up in 5 waves, so we come down in 3. That would not surprise me. So yes, the dollar can rebound, and it should rebound a bit. And even in this B wave, you can even make a higher high. You can make you can have a running flat or an overthrow here of the A wave. Sure. Okay, that's not out of the ordinary. But I do expect for the dollar to put in a three-wave correction at the very least. So in the aggregate, in the long term, I do expect for the dollar to lose value, relative value, okay, in the next decade for that reason. So, we don't need to wait for all the news to happen. We can see it in the charts, and the charts are quite consistent. And this is why we study them. This is why people have studied them. This is why we've established these means of reading, of chart analysis, because they're consistent. Why they are, I'm not exactly sure. I don't know. Can't answer that. Okay. Let's look at the dollar on the smaller time frame. Okay. So on the smaller time frame, what I think is interesting is you've just come from an area of strong resistance, right? This magenta box. You tested it and you got rejected. Now, how did you get rejected? Impulsively. So first you put in an A wave. This was a B wave. Okay, we know that because it was likely not a wave 1, wave 2 situation. It's likely a zigzag. So A wave, B wave, and now here you're putting in an impulse. So we're looking for 5 waves. 1, 2, 3, 4, and probably 5 is not finished yet. Okay, why is it not finished yet? Well, because you just broke this level of support. And what do we know about support that's lost? Well, when you break it, you have to retest it, and then you continue on your merry way. Okay, so that's exactly what happened on the smaller time frames, right? You broke this support, you retested in a flavor of 3, which is a corrective wave, and now you continue your rejection. So on the smaller time frames, I do expect the dollar to continue to the downside. This is consistent with what we expect should happen in Bitcoin, given what we just saw a few minutes ago on the Bitcoin chart. So that's the DXY. Okay. So the last thing I want to say about Bitcoin and Bitcoin's price in the medium term, right? And why 30K is not a likely target. And it's a very, very low target. It's a lazy target. It's one of those psychologically round numbers. Again, if you do your analysis, you see that the target's more likely than not going to overshoot 30K. And if anything, we may find support later on the line. We may retest 30K as support, but nothing else. Is if you just do the simple pattern analysis, right? Take the height of this inverse head and shoulders that I have here in blue, okay, which is a bullish reversal pattern. You superimpose that on the top, which is the neckline, okay, and you project that. It gives you a target of 37.7, okay? So again, the 30K level is not what you think. It's highly unlikely that Bitcoin find 30K and stop there. You're likely to go way through it, at least to 37, if not all the way up to 47. Okay, so that's where I would target for Bitcoin in the coming days. Now, at this point, we do want to also address the rumor or whatever, the hot take that Bitcoin is going to 1 million in 90 days. All right. So for this, we're going to have to switch over to our weekly chart, our master plan. Okay. And if you're subscribed to the channel, you'll know we've been talking about this for a long time. This is nothing new. I know a lot of people are kind of running off of this. A lot of YouTubers are using this as an opportunity to get more clicks, but they don't really have serious opinions about whether it can go to 1 million or not, because they may not have done the analysis on a higher time frame. But what I said in the beginning was this: the $1 million target is not irresponsible. It's not crazy. It is not stupid, but it makes sense. Why does it make sense? Okay, and it's not that the $1 million specifically makes sense, but millions of dollars for Bitcoin makes sense, technically speaking. Okay, reason being, if you look what happened here for Bitcoin in this bull market, okay, or you look at what happened for Bitcoin in this bull market, look at the types of gains that you got. Okay, first, let's go and project Bitcoin to, where I have us ending, which is about 1.6 million, 1.7 million. Okay, that represents the phi ratio, by the way, of this wave 1, minor wave 1, retracement of wave 2. Okay, and that's a typical run-of-the-mill Elliott wave projection. Nothing crazy about that. If we measure from here, from the bottom, that would represent almost a 9,000% increase in Bitcoin. Okay, 9,000. Just keep that figure in mind. So if Bitcoin goes up 9,000%, it hits our target of 1.68 million. Okay, and again, we've had this target for months, way before Balaji's tweet thread. If you look at Bitcoin in September of 2010, in that bull market, it went up 193,000%. Remember 9,000%? 193,000%. Okay? If you look at the bull market of 2011, Bitcoin went up 43,000%. Remember, we said 9,000, right? 43,000%. Again, people just talk and they have no sort of good, they're just saying stuff. And this is what you don't want to do. As a trader, as an analyst, you do not want to just think of something and then respond emotionally and not really look into it seriously and base everything on your emotional feeling. The fact that most people are emotionally triggered when they hear Bitcoin to 1 million, even people that are bullish, tells you that, okay, that's just unreal. I don't know, I can't imagine that. That's unserious. That is irresponsible. But if you look historically, Bitcoin has gone up. Even the most recent, let's see. Yeah, this is the most, no, that's not the most recent bull market. This was the second to last, or not the second to last bull market, but the bull market before the one we had just before. Bitcoin went up 10,000%. Okay, 10,000%. We're talking 9,000% to get to 1.68 million, right? 10,000% in 2015 for that bull run. Okay, obviously this most recent bull run, Bitcoin only went up 1,400%. Okay, so we're talking 9,000%. But again, this was wave 1. This is wave 3. Wave 3 is typically the fastest, the most impulsive, the largest Elliott wave. Don't expect wave 1 to be a major impulse, but wave 1 was 1,400%. So do we expect wave 3? Is it out of the ordinary? If wave 1 was 1,400%, that wave 3 be 9,000%? Absolutely not. So a $1 million Bitcoin is not just reasonable, it's it's technically accurate, closer to the technical target than people know. Okay, so that's my take on $1 million Bitcoin. I know a lot of people are talking about that, but very few people are giving that take a substantive sort of analysis. And on this channel we do high time frame analysis sometimes using Elliott wave, and 1.68 million has been our target for quite some time. All right, now we've done Bitcoin, we've done the DXY, we've done the $1 million Bitcoin talking point, or whatever, the $1 million Bitcoin argument. Let's look at some altcoins. And guys, if you're getting value, please like, share, and subscribe. If there are any altcoins that are not in my watch list that you want to look at, you want to discuss, then just let me know in the comments. All right. Let's go on the hourly time frame. Okay. All right. So Cardano. So kind of like I said with Bitcoin, we're most likely in a reaccumulation, right? You can call it a reaccumulation, you can call it a bull flag, but it's, you had a move and you're getting some sort of consolidation following that move, so you should continue with that move. Okay, so you went up, consolidate, you go up some more. That's the analysis, quite simple. If you drill down and you look more precisely, more specifically, you're looking most likely at some sort of consolidation reversal, or in this case actually you're looking at some sort of complex correction following this. This is corrective, right? This looks like a three-wave move, 1, 2, 3. This is corrective in a complex way, so I think this is an A, B. You're looking for an impulse there. Okay, that's what I'm looking at with Cardano. That's what I'm seeing with Cardano. Okay, one moment, let me just check something. Okay. Just checking. All right. Almost done. Okay. I'm just checking my positions. You guys know I have a lot of positions. Okay. All right, cool. Okay. So yeah, that's what I'm seeing with Cardano. Moving on. Algorand. Same deal. And if you guys were with me on Friday, I was talking about how, given that this represented some resistance, we broke it to the upside, we're likely to retest it. And that's exactly what you got here. Okay, it took a while, but that's essentially what you're doing. You came up correctively, or what seems like a corrective move. Yeah, and then you came down correctively, and in 3 waves. Okay, and now you should continue impulsively. So just like what we saw in Cardano, correction, correction, impulse, 3-wave move right there. A, B, C. This looks like a zigzag, right? 5 waves up, 3 waves down, and then impulse. And why do we consider this a zigzag and not an impulse, a pure impulse? Is because the time it's taken to go up is not commensurate with the time it's taken to come down, which would tell you that it's likely a zigzag and not a wave 1, wave 2 situation. Okay, so that's Algorand. Arweave, same thing. Go up in 5 waves, come down in 3. Again, the time it's taken to come down in 3 and the time it's taken to go down in up in 5 waves, completely different. It's likely a zigzag. We can check to see. Let's see. And yes, see right here, what do we know about zigzags is that the minimum retracement level for any zigzag is the 0.5 Fibonacci retracement level, and that's exactly what you got here, okay? So 5 waves up, 3 waves down, 5 waves up impulsively in pure impulse, okay? So that's what I'm seeing with our wave. Audio, a little different. Here, no, actually it is similar, but it looks a little different. I think here you have your one zigzag, and then you have another zigzag here. So it's like a double zigzag. This is your double zigzag. Do you see that? The 3-wave correction in this first zigzag is a running flat. So you go up, down, but it's essentially a double zigzag that I'm seeing here. And this double zigzag, the second one, serves to retest the neckline of this massive inverse head and shoulders, as you can see here. So again, this is really bullish. Like, you want to be bullish in the market when you see everything looks bullish in major resistances are broken and retested as support. This is when you want to be bullish in the market, right? It's not a question of whether you're going up. It's a question of when and where you're going up from. Okay, that's how I'm seeing it. So that's audio or audius. Blur, okay? Here I'm seeing that you put in a series of corrective waves. Okay, this is our first zigzag. All right, 5 waves up, 3 waves down. Now, prior or subsequent to that, you have this wicked consolidation reversal pattern. Okay, I think that's all that this is. It looks much more complicated than that, but essentially what I'm seeing is 2 degrees of AB basing and a pivot. Okay, that's what I'm seeing. Maybe the pivot. Maybe the... maybe this is the second degree. Maybe this is the pivot right here. Okay, I'm not exactly sure. But this is definitely some sort of consolidation reversal pattern. And this was the 5 waves up, 3 waves down. So I think this consolidation reversal pattern just serves to absorb all the supply from this really big dump from this 3-wave move down. Okay, so that's all this is. Once this finishes up, then you continue up. So again, 5, 3, or you could say, one could say, but I don't know about this. Yeah, I like that read better because I was going to say something like this, but no, that doesn't seem correct. Let's see. It's possible. It's possible if you have a, look, 1, 2, 3, 1, 2, 3, 1, 2, 3. So instead of a 5-wave move, you have a zigzag, right? So like 5, 3, 5. That's possible. And then all of this is your 2 degrees of AB basing and a pivot. That's possible. It's possible. I don't exactly know. You know, corrective patterns are tricky. You know, that's why it takes a long time if you can ever master them. If it's possible to master them, it takes quite a lot of work. So many different permutations, combinations, but this does look like it's working its way out. So let's see on the 15-minute time frame. Yeah, I can see that. I can see that. Okay, so it does look like it's working its way out of this entire region of consolidation for Blur right here. Okay, Bonk. This looks like it's essentially finished. Okay, so you see this massive inverse head and shoulders. The neckline of this head and shoulders was broken. That is confirmation. Remember, confirmation of an inverse head and shoulders or a head and shoulders is breaking of the neckline and retesting that neckline as support or resistance, okay? In this case, we're looking at a support retest. Break, retest as support. This is very bullish. Look at the target, okay? Look at the target. If you're just doing pattern analysis, your target is this right here. Okay, back into this area right here. So more likely than not, this asset, Bonk, is likely to give you 121%, something like that. 120, 121%. I think these targets are a little underselling it. I think you're coming up to the top of this range. So 120, 130%. Okay? And you might get this in the next couple of days. Because again, look, I mean, this is not, it's not too far of a stretch to say, but this inverse head and shoulders is confirmed, right? And essentially what you've done over the past couple days, you're not only confirming it, but you're cementing it. You're making sure that this level is now a support, where heretofore it was resistance. You broke up, now it's support, now you break out. So I would not be surprised if you got 130% before any significant retracement in Bonk in the next few days. Okay, so Dent. Well, guys, again, you're just getting a bunch of inverse head and shoulders. A bunch of inverse head and shoulders. And this, too, is some sort of move where you went up correctively and you went down in 3 waves correctively. So expect to do this, because this is essentially what you would call a bull flag, right? You have a flag pull, you have a flag pennant, or whatever you want, or 5 waves up correctively, 3 waves down correctively. You should get 5 waves up impulsively. It's an ABC zigzag. Okay, that's what it looks like to me for Dent. Dodo. I'm seeing a running flat here. 3 waves, 3 waves, 5 waves. Okay, so I'm seeing a running flat, and actually I'm seeing this running flat be the B wave of this zigzag. So A wave, B wave, followed by another fully impulsive move. Okay, so I think what you got here is a wave 1, wave 2 situation. Okay, fully impulsive. So let's look at that. Guys, if you're getting value, please like, share, and subscribe. So I don't know if that can be fully impulsive. Let's see. Let's go on a smaller time frame. It's got to be a double zigzag. It can't be a fully impulsive. It just doesn't work with. So right here, I'm seeing this all as being one contiguous correction. Again, it's a running flat. So Dodo's particularly bullish, kind of like Bitcoin. It's putting in running flats, okay? That's a flat correction where the terminus of the C wave does not reach the point of the A wave. Okay, so basically there's too much buy pressure for these flats to end up straight orthogonal. Okay, and I'm seeing that this is again some sort of, well, this is like a 3-wave move, not a 5-wave move. No. I think this is a complex correction. All one complex correction right here. Okay, and you might just be at the 0.618 of this move up. So yeah, I would maintain that this is some sort of double zigzag. Okay, this is pretty involved, but zigzag here. 5 waves up, 3 waves down, 5 waves up, flavor of 3 waves down. So this may be, if you look at it, all a bunch of corrective waves that are working as a consolidation reversal in terms of absorbing all of this supply. So this is really, really bullish. That's what this tells me. That instead of having, okay, so basically the idea is this. You dump all this supply on the market. Typically, you do something like this until you can mark up. You absorb the supply in 2 degrees of AB basing and pivot, Wyckoff accumulation, whatever you want to call it, and then you mark up. But in this case, what it seems as if Dodo's doing is that it dumped the supply at a discounted rate. Now the absorption of the supply is happening up and to the right. So people are willing to buy this asset at higher and higher prices despite a recent dump on the market. That's how bullish the higher time frame are. Okay, that's how bullish this market is for Dodo. That's what I'm getting. That's what the chart's showing me. Okay, so that's Dodo. Dogecoin. Okay, so this, I think, is quite clearly some sort of, I don't know if it's a zigzag, some sort of flat correction, to be honest. Or is it a zigzag? Let's see. I'm going to pull the fibs. Yeah, it can't be a flat correction. Why? Because it didn't hit the 786. At least if you pull it from there. If you pull it from here, it is definitely a flat correction. And yes, there's some ambiguity as to where to pull it from because, you know, we have to figure out what this is. But let's just assume that this is the start of this correction. Somewhere around here. Okay. Then this goes up in 3. This comes down in 3. So that's a flat correction. Okay. Now this goes up in 5. This comes down in 3. Okay. So that's our zigzag. Okay. Or you can, yeah. I think that makes most sense, yeah? Instead of looking at this as one contiguous correction, it just doesn't make sense to me. So now I feel we want to look at this, right? Every time you look at these corrective patterns, it's just in pairs. Everything comes in pairs. Just like in nature, there's up and down, left and right, positive, negative, you know, good, bad, black, white, all that stuff. Like, you always get an A wave and a B wave. And then those two result in something, a C wave or an impulse, right? If it's down, up, then that impulse is in that direction. This is why, like I said in the beginning of the stream, the whole purpose of trading or charting and really reading markets well is discerning corrective price action. And here, I believe you have some sort of 5 waves up in a corrective manner, and then 3 waves down in a corrective manner. Yeah, I think this is a zigzag right here. It looks like a zigzag. So I think this is it. A, B, C. And then what you're doing here is some sort of small consolidation reversal. But all of this is 5 waves up, 3 waves down. And you're respecting that phi ratio. It's tough read. Tough. Hard to know when it's coming. Hard to know what it's going to look like. But yeah, you're right on that 0618. Okay. So that's what I'm seeing. So yeah, zoomed in, you can see that there's some consolidation happening here. And our momentum indicator is saying that it should be close to finished. Okay, so that's Dogecoin. Polkadot. Here, I think you're dealing with 5 waves up correctively, 3 waves down correctively. Again, I think you have zigzags in this in this final impulse, right? This is what Bitcoin did on a high time frame, and it threw a lot of people off. Why? Because when you're looking at an A wave, a B wave, and then a C wave, okay? Let's just use it like this, right? Obviously, we're talking about a downwards move, but let's just use this example all the same. You're typically looking for 5 waves in C. Whether you have 3 waves in A and 3 waves in B, or 5 waves in A and 3 waves in B, you're typically looking for 5 waves in C. Why? Because C is typically an impulse. When we talk about impulses in Elliott wave theory, we're used to talking about things like this. But this is possible that in the place of that C wave, the impulse not look like just a run-of-the-mill 5 waves, but it looked like this. Maybe not. Like this, okay? Because this can only retrace to a maximum of 0618 of this, right? So that would be a zigzag. So essentially you're getting 2 impulses. Really tricky. Impulse number 1, retracement, and people think, oh, we're done. Nope. Impulse number 2, that's your zigzag. It's treacherous. Very, very tough to trade. Catches a lot of people off guard. Okay, just as it did on the high time frame in Bitcoin. If you're not exactly sure what I'm talking about, I'm going to show you really quickly. Let's go on the daily time frame. Okay, but here's what I'm talking about. So if you look at Bitcoin, it went down in 5 waves, okay? Or actually, this was a double zigzag. But it went down in something that looked like 5 waves. Then it started coming up. A lot of people thought this downtrend was finished at this point, but this was just the intermediate wave. I would call this an X wave, not a B wave, because you have a double zigzag here. But after that, you got even more impulsive, even more treacherous of an impulse. So you have essentially 2 impulses where most expect one single 5 wave impulse. Very tough to read, caught a lot of people off guard, myself included. But sometimes, and that's where I learned this actually, sometimes in that C space, right, instead of the run-of-the-mill 5 waves, you can get zigzags or double zigzags, right, as you saw with Bitcoin in that example. Okay, but here, I think it's very likely that you're looking at an A wave, a B wave, and then your C wave is like this, a zigzag. Very tricky. At the end of the day, what's more what is more straightforward is the idea that this is a zigzag. This whole thing. Okay? And you're essentially putting in 5 waves up correctively and a version or a flavor of 3. I always say flavor of 3 because it's not only just 1, 2, 3 straight lines, right? It's a flavor of 3. Sometimes it can look more complex, right? it could be a WXYXZ or something like that. But flavor of 3 correction. So I think that's what we got here, and I think this is a double 3 WXY. And so I would look for a reversal at this point right here, right in the golden pocket between the 0.5 and the 6.8. So we jump down, and what can we see? Let's go on the even smaller time frames here. Okay, so first thing that comes or jumps out at me is the fact that this is 5 waves. Okay, do you see that? Okay, let's just do a really quick annotation. Guys, if you're getting value, please like, share, and subscribe. So I'm seeing this right here. I'm seeing this. So 5 waves down. Okay, so basically this is the impulse completing the zigzag. If we turn on the volume, I know this is the 5-minute time frame, so this is just really small time frame analysis, but yeah, the volume does indicate that we see some capitulation right here at this candle where we have our final wave. Okay, so that is to be expected, and from here we can count our initial break of structure targeting wave 4 of the previous trend, our initial B wave, secondary A wave, perhaps a secondary B wave down here if it's a flat. If it's a zigzag, we go up a little more and come back down here. But yeah, we're working out some sort of reversal pattern here on the small time frames. Okay, so that is polka dot. Okay, moving forward. And by the way, yeah, these reversals are very much likely taking place because we can see that our momentum indicator on the hourly time frame is all the way back into oversold area, into oversold territory, and that hourly candle is coming up in about 18 minutes. So that you can expect sooner than later. Okay. DYDX. Let's see. 1 second. Okay, so DYDX. Here I'm seeing. Okay, this is one of those cases where we came down, found some resistance here, broke out, and retested it. That's essentially it. Okay? It's a break and retest situation here. And I talked about this on Friday. And this did take some time, but we got it. And this is quite clear. A, B, C. I think we're getting zigzags. It's just a time for zigzags. We typically get zigzags in the market. Why? I don't know. I think Bitcoin leads the pack or sets the trend and everything else follows, because once Bitcoin does it, then everything else does it. Why do we get zigzags? Well, if I wanted to throw the most people off possible, I would put in a zigzag correction, because like I said, most market participants think it's over once you start going up here, and then this really crushes most of the market. Most longs get trapped here, and then that's basically added liquidity. So maybe the market's really looking for that big move up and getting as much liquidity as possible by putting in a zigzag instead of 5 waves. Okay, I don't think, again, that there's some heinous, hideous, mean, nasty fat white guy in a corner in some office in Manhattan, sort of masterminding all of this. It's just what the market does, and the market naturally seeks liquidity. So the market does generate liquidity through a variety of these corrections. So this is why I think we have a zigzag here as well. But again, it's a three-wave move, and that three-wave move is counter to, I think, this three-wave move. Or, no, this five-wave move. So again, you may be looking at a zigzag on the higher time frame as well. I hope people aren't confused. No, it can't be, because you broke that 618 right here. Okay, so this has to be some sort of flat correction. This has to be some sort of flat correction. Okay. On the smaller time frames, okay, you look like you're putting in a move up. Okay, we do see 1, 2, let's see, 1, 2, 3, 4, 5. I think you had a it's a little odd. Yeah, I think wave 2's up here somewhere. 1, 2. Yeah, so wave 1 and 2 are the same size, and then, or sorry, wave 1 and 3 are the same size, and then wave 5 is extended. I think this is the end of wave 5. You get an ending diagonal here. This was heinous. It's tough. Okay, but I think this is the move here that you're finally getting up and out of this trend, this local trend. So that's DYDX. Okay, Ethereum, like I said earlier in the stream, this is a 55-day resistance turned into support, and essentially you've just been dancing on this, churning old resistance into new support. Let me do one thing real quick. 1 second. Okay. 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 Okay, so that's Ethereum. So you're on that 55-day resistance, flipping it into support, and I think what you're doing here is no different than what you see a lot of these other altcoins doing. 5 waves up, 3 waves down. And I would count this as a zigzag. Let's see. Yeah, from here. Is this a zigzag from here? Not exactly sure where to pull this, but I would want to pull it from here. Yeah. I would say this is a kind of zigzag, right? 5 waves up, 3 waves down. Again, there's no parity between the time it takes to go up and the time it takes to come down with zigzags. That's the definition of a zigzag. That's what distinguishes a zigzag from a regular wave 2 scenario, the time. Link is particularly bullish. Okay, so I would say that Link put in a zigzag here. That's your first zigzag, and then here you put in a flat correction. Okay, you went 3 waves. Let's move this. 3 waves, and then 3 waves down. Okay, so that's basically one set, So this is your first set of AB basing, your second set of AB basing, and then this is your final zigzag right here. Okay. At the end of the day, you're putting in a strong cup and handle bullish pattern, and you're retesting that neckline as support right here. So that's link. It looks like it's breaking out sooner than later. Lit entry. Looks like what we were talking about on Friday, right? This was strong resistance, finally broke out, now it's retest. Okay, and that retest of this breakout is the neckline of not only this target, or not only this this pattern, but also the midline of your entire consolidation channel, which we know is support when you're above it, resistance when you're below it. Okay, so that's what lit looks like it's doing. Again, you're dealing with corrective patterns, so corrective up, corrective down. Looks like a flat correction, right? This goes up in 3 waves, this comes down in 3 waves, or a flavor of 3, as you can see, right? Some sort of complex correction down to the 786. Litecoin, kind of same thing as what we just saw in lit entry. You can see there's a clear, well, let's just draw it out properly. There's a clear neckline here. Pull it down a little bit. But it was resistance back when you were here. You broke it. Now you retested it. That's all. Okay, so you went up correctively. You came down correctively. Went up in 3 waves, came down in a flavor of 3. Now you continue. Okay, expect that continuation to be purely impulsive, as we should expect, right? Because it's the C wave. Okay, Moon River. This looks like a drawn out flat or zigzag correction. 5 waves up, a really drawn out flat correction, or sorry, zigzag correction. 3 waves down. The 3 waves down is a flat correction. It's a complex flat correction. That's why I kept saying flat correction, because I'm looking at this and I'm thinking complex flat correction. Okay, but you can see again, there is no relationship in time between the 5 waves up and the 3 waves down in a zigzag. None. That's what makes it corrective. Difference between a purely impulsive wave 1, wave 2, and wave A, wave B, or wave W and wave X of a zigzag. Harmony put in what looks to be some sort of 5 waves, 3 waves move. Again, you can see the impulse of that 3 wave move is a zigzag in itself, in and of itself. Makes it super tricky. But you can see it's coming to an end. RSR, same thing. 5 waves up, 3 waves down, and let's see. Yeah, this is just a triple 3. This is a triple 3. So this is a quintessential bull flag, right? Flagpole, pennant, continuation. But you can see exactly what I'm talking about. WXYXZ, right? This is a triple 3 correction, but it's a zigzag when it's all said and done, right? 5 waves up, 3 waves down, or combination, or a version of 3 waves and then 5 waves up. Okay, sand, again, just a bunch of zigzags. It's easy to read after it's all said and done. Trying to trade it is very challenging. The more you try, the more you sort of try and read these corrective patterns, the better you get. And if you're able to trade these, your earning potential is unlimited, because this is the cause and that's the effect. And if you're able to get in on the cause, then you trade for the effect every single time with a high degree of probability. So that's another zigzag in sand. SHIB, this is a flat correction, but it's very much like lit, very much like Litecoin. You had resistance here, you broke it, you came up, and you came right back down to retest it as support. That's very bullish. There's nothing bearish about any of these charts right here. If people are short, they're going to be sorry. There's absolutely nothing bearish about this. And not only that, it's not only that it's not bearish, it's really bullish, right? Not only based on the technicals, but also based off of the fact that we're 3 days away from the FOMC and full new moon. And the new moon, we know, represents a local market top. So if we can expect a local market top, just imagine what these charts should look like in 2 to 3 days. Okay, synthetics. This is quite bullish. Here we have what looks to be 5 waves up, 3 waves down. And I think after that, you can say that this entire thing is some sort of consolidation reversal. I don't see this as all being one and the same. I see the 5 waves up, 3 waves down as being finished. And then I see this as being a consolidation reversal channel. Okay, Telcoin, look at this, look at this, look at this. So, you come up in 3 waves, you come down in 3 waves, you come up in 3 waves, you come down in 3 waves, you come up in 3 waves, you come down in 3 waves. 2 degrees of AB basing in a pivot, and you happen to retest this massive, massive resistance as support, okay? When I talk about massive resistance, for those of you who are not familiar with this chart, I mean massive resistance. It's 600 days worth of resistance. This falling channel right here that you broke out of recently, you're retesting it as support. Just imagine what that means, okay? If you look at the entire chart, this is a massive cup and handle pattern, okay? So your target actually, your technical target for Telcoin is the height of this cup. Let's change this real quick. The height of this cup superimposed from the side of breakout, right, which should be around here. This is the neckline. And it should take you to this next point of resistance. So about at right under here. Okay, this is clearly going to be resistance, right? It was support here, it was resistance here, and now it's confluent with that target of the cup and handle. So if I'm in Telcoin, I might see let's see, from where we're at now, a 300. I might see a 3x in the next 2 or 3 days. A 3x. Okay. I might look to take profit at 0.009, thereabouts. Not financial advice or financial advice, whatever you want. Don't care. Okay, so that's Telcoin. Okay, so Tron. Again, look at this. Guys, there's nothing bearish about this. Nothing bearish about this. It's not about whether you should be bullish or bearish. It's about where you should make your entries and when we should break out. That should be the conversation right here. It's not even debatable. Look at these charts. Look at this. You come up, you retest once, right? This 600-day resistance turns support now. You come up again and you retest it again. And now you're consolidating, essentially, in like a triangle. Okay? So this is extremely bullish. Extremely bullish. That's on the daily time frame. On a smaller time frame, you're essentially putting in what can only be a wave 4 consolidation. Why am I saying wave 4? It's because you didn't reach the 0.5 of this move, okay? If you don't come back to the 0.5, it can't be a zigzag retracement. It can't be a wave 2 retracement. The only thing it could be is a wave 4 retracement, okay? Obviously, it can be a wave 2 retracement if it comes to a minimum of the 382, but I don't even think you hit that right here. You see? So it's likely only going to be a wave 4 retracement. And wave 4 retracements, we know, are typically long, drawn out, complex, and that's the only place you can get a triangle in an Elliott wave. All right. V-chain. This is, again, one of those areas where you had resistance here, right? I talked about this on Friday. You break out, retest, break out. It's kind of a retest in 3 parts, right? 1, 2, 3, and this whole thing is a running flat with an ending diagonal. You see that? That's an ending diagonal. So that is V-chain. XRP. This is a series of, so this is a zigzag right here, 5 waves up, 3 waves down, and then this is a flat correction, 3 waves up, 3 waves down, down to the minimum 786 of those 3 waves up. So that's what I'm seeing with XRP. Nothing bearish about it. If you look, you see that you can look at all of this as a W reversal, breakout, retest, and then breakout. Okay, Zilliqa, last but not least. Again, I think because this is shy of the 382, I think it's ever so shy of the 382. If you want to take this right here. Let's see. Oh, you just hit the 382. Okay, so this can actually be a wave 2 retracement. Right here. This could be a wave 2 retracement. In terms of time also, it works, right? The time it takes here, time it takes there, comparable. And then you come up here, this, yeah, I can see that. Yeah, this could be a wave 2 retracement. And then this could be another wave 2 retracement for Zilliqa. Because you can see the time it takes to come up is about the time it takes to come down. That's just one read of it. I'm not exactly sure what's going on, but this looks like 5 waves up, 3 waves down, coming down to the 0.5 to 618 of these 5 waves up. And I clearly see here 3, 3, 5. Okay, and again, that impulse looks like it's not 5 actually, it's a zigzag, but you know, we say 3, 3, 5 when we're designating flat corrections or when we're counting flat corrections. Okay, so that's Zilliqa, and that's it, guys. If there's nothing else, that's my analysis for the day. Hope this was helpful. Hope this was useful. Like, share, and subscribe. I hope everyone's well and taking advantage of this volatility. And I will see you tomorrow.